Welcome back to another Money 101 episode. And on today's Entrepreneur Vault Money 101, what we're going to be talking about is actually finally starting to, touch base on some of the things we went over last time. We went over the 5 different types of financial independency routes. And this next couple of 5 episodes are basically kind of going to do an overview. I'm not going to go too much in detail. I'm just going to introduce what it is. And on this episode, we're going to be introducing, Forex. What is it? And how is it a financial independency route? And how can you get started on it? So basically, to get started on what Forex trading is basically where you're trading currencies in the market. And that can be something like Euro USD trading against each other, since that's the most common Forex pair out there, including the Japanese yen, the Australian AUD, we got the New Zealand dollar, NZD, and etc. We have exotic pairs like the South African rand and etc. You basically trade against them. And the way they're able to be measured on which one does well, which one does bad, is based on economical performances, based on real estate performances, and also in general also based on historical chart movements and price corrections in the market. So what you do as a trader, right? What you're doing as a trader is you're actually kind of trading the pairs, right? Like you're trading a stock, except now you're trading the euro against the dollar or something, and you're gonna be like, you know what, the dollar's having a good rally, they're having a good economical growth, so I'm gonna buy the dollar. And that's basically what you're trading, and then you're able to make money based on the amount of points you're able to gain during those movements in the market. Now, before I even go further, there's something I have to put there as a disclaimer, a huge disclaimer in the Forex market. 90% of people lose in the Forex market. Let me repeat that. 90% of people lose in the Forex market. So it's a very small percent of people who are actually very successful traders, which is about 10%. Sometimes it's really just about 5% of actual successful traders in the market. But the biggest reasons why people lose is because of emotional things like greed. You getting very greedy is going to be one of the biggest causes why you're going to lose. You basically not being humble in the market, which kind of goes with greed, but there's greed in a certain way that you make money and then you keep wanting to make more, or sometimes you make money, you're not quite humble with it, and you keep wanting to get more gains. That's going to make you end up losing the money more than anything. And other people, it's lack of experience. I think it's a very huge part because if you're a trader who starts today and you're very aggressive on it each and every day, it's probably going to take you at least 1 to 2 years before you become a profitable trader. Because most people expect to just enter the market and start making profits instantly. That's not going to happen. That's why 90% of people lose. But if you look at the numbers, is that the people who stick to the trading for over 6-7 years is a very small percent, because more than 80% of people drop off in just those 5 years of trading. I think it's like the first 2-3 years of trading. So you can see how we have that kind of small percent at the top. So you have to stick with it, and you have to be really good, and you have to be very patient with it. So if you're very much interested in if you love economical news, if you love reading the economic section about how different countries are doing in the economy, well, this is one of the financial routes that you can take as a financial independency. You might as well learn how to trade those charts. You might as well learn how to read those charts. Now, I've been doing Forex trading for a while, and I'm not here to give you the technical analysis and the way to read the charts, because I do know about support, resistances. We have different things like last kiss trades, breakouts, and all this cool, hanging hammer and Japanese candlestick patterns and all those different things. There's a lot of different ways to analyze the market. So what I recommend for you is, if you have any interest, you feel any kind of passion towards this, then you can get started on YouTubing and Googling and learning more about it, because I'm not about to go full out into it. I'm just kind of introducing it. As in, later in the course, I will touch base on different areas. So that's another thing you can be able to kind of catch forward on. But for this episode, I just want to introduce Forex trading, and that's exactly what it is. It's very simple. It's not too complex. But as I mentioned, it's very simple. It's not too complex. But what's complex is the psychology of trading. Reading the charts, over time, it'll become simpler, but the complexity is always the psychology, the human part of it. That's why it's a very small percent within the market. So anyway, thank you very much for watching this episode, and next week we'll be diving into the next section of some of the routes for financial independency. This has been an introduction, and we'll go more deeper in this later after we introduce all the different 5 types of financial independency routes. Thanks for watching, and see you later on another episode. Peace out. And by the way, you have any questions, inbox on Facebook, comment section, A lot of people usually love inboxing on Facebook. I love that as well. One-on-one chats, you can do that as well if you have any questions about this. And if you need more information about it, you're passionate about this, I will send you some information and I'll guide you on it. So I don't see that I should make a 20-minute episode going too much in detail when we have different people who have different passions on this, okay? So thanks for watching. Peace out.